Imagine a machine so powerful that it can make or break entire economies, yet almost nobody fully understands how it works. A single decision from this institution can raise the price of your groceries, increase your mortgage payments, or even decrease the value of your savings overnight. And here's the shocking truth. Most Americans have no idea that it isn't truly controlled by the government. This isn't a shadowy conspiracy in some hidden chamber. It's a real, legal, and extremely influential institution called the Federal Reserve, quietly shaping the financial heartbeat of the United States. From Wall Street boardrooms to your local bank, from the stock market to the jobs people depend on, its reach is nearly invisible yet all-encompassing. Today, we are going to pull back the curtain and explore how the Fed holds power most of us never even knew existed, why it was created, how it operates in secret, and how its decisions affect your life every single day. The Federal Reserve, or simply the Fed, was established in 1913, at a time when financial crises and bank failures were a constant threat to the American economy. Officially, it was designed to stabilize the banking system and prevent panics. But the story behind its creation is far more complex. Influential bankers, politicians, and powerful financial elites pushed for an institution that could control the flow of money in ways no other government body could. Unlike the Treasury, which technically belongs to the government, the Fed operates in a gray zone between public oversight and private control, giving it extraordinary autonomy. It has the authority to print money, regulate the supply of credit, manipulate interest rates, and influence both domestic and global financial markets. Its actions ripple through the economy, affecting employment rates, inflation, consumer prices, and even the value of the dollar around the world. What most people don't realize is that the Fed's influence isn't just about abstract economics, it impacts real lives. When it decides to raise interest rates, suddenly loans for homes, cars, and businesses become more expensive. When it lowers rates or injects money into the system, it can create booms in the stock market while inflating the cost of living for ordinary Americans. Over the years, it has been at the center of some of the biggest economic crises, from the Great Depression to the 2008 financial meltdown, rescuing banks while millions of people lost their jobs and homes. And yet, despite wielding this enormous power, it operates with limited transparency and almost no direct accountability to the public. Over the next 20 minutes, we will dive deep into the Federal Reserve's secret history, its hidden mechanisms of control, the controversies and criticisms it faces, and most importantly, how its decisions ripple into the lives of every American. By the end of this video, you will understand why this institution could arguably hold more real power than the President or Congress, and why learning about it is not just a curiosity but a necessity if you want to understand the invisible forces that control money, wealth, and power in America. You will see that the Fed is not just a distant financial institution. It is a central part of your financial reality, quietly shaping your future whether you notice it or not. Chapter 1. The Origins of the Federal Reserve. The story of the Federal Reserve begins in a time of financial panic, bank runs, and economic instability in the early 20th century. Before 1913, America didn't have a central bank to stabilize the economy. Banks were fragile, and when one failed, it often triggered a chain reaction. In 1907, a severe banking crisis shook the nation. People panicked, rushed to withdraw their money, and entire banks collapsed. The economy teetered on the edge of disaster. This panic revealed a glaring problem. The U.S. needed a system to manage the money supply and prevent future collapses. Enter the Federal Reserve Act of 1913. Officially, the Fed was created to serve the public interest, stabilize banks, manage credit, and control the money supply. But the story behind its creation hints at far more than public service. Powerful bankers and political figures influenced the legislation, designing a system that gave private banks extraordinary control over national finances. It was a delicate balance. The Fed would appear as a government institution, yet it would maintain independence from political oversight, giving it a level of power few other agencies could match. From the very beginning, the Fed operated with secrecy and autonomy. Its board and regional banks were designed to make key financial decisions out of public view, with the goal of preventing panic, but also giving bankers unprecedented influence. The Federal Reserve was not just a response to financial crises, it was a deliberate effort to centralize financial power in a way that could shape the U.S. economy for generations. What started as a solution to instability quickly became an institution whose decisions would silently dictate the lives of millions of Americans. Chapter 2: How the Federal Reserve Works. Understanding the Fed requires grasping its unique structure. It's not a single entity, but a network of institutions. The Board of Governors in Washington, D.C., 12 regional Federal Reserve banks across the country, and the Federal Open Market Committee, or FOMC. Each part has a distinct role, but together they control the nation's money supply. While the government technically oversees the Fed, it operates independently, making decisions that are often hidden from public scrutiny. The Fed's most powerful tools are interest rates, the money supply, and market interventions. By raising or lowering the federal funds rate, it influences how expensive loans become for consumers and businesses. When the Fed wants to stimulate the economy, it lowers rates, making borrowing cheaper, encouraging spending and investment. Conversely, raising rates slows down borrowing and spending, which can reduce inflation but also cool economic growth. Another tool is quantitative easing. The Fed injects massive amounts of money into the economy by buying government securities, aiming to boost liquidity and stabilize markets. Most people never see the Fed's actions directly, but the consequences touch daily life. Mortgage rates, credit cards, car loans, and even the stock market are all influenced by Fed policy. Its decisions create ripple effects. When the Fed prints more money, inflation can rise, diminishing the value of savings. When it restricts credit, businesses may struggle to grow, affecting jobs. The Fed operates quietly, yet its decisions are felt in every household, every paycheck, and every business. This hidden influence makes it one of the most powerful institutions in the country, even though few fully understand how it works. Chapter 3: The Fed's Hidden Powers. The Federal Reserve's power extends far beyond interest rates and money printing. It can decide which banks survive crises, which corporations receive bailouts, and which sectors of the economy thrive or fail. During the 2008 financial meltdown, for example, the Fed orchestrated a massive rescue of Wall Street banks, injecting trillions of dollars to stabilize the system. Ordinary Americans, however, bore the brunt of the crisis. Millions lost homes, jobs, and savings, while large financial institutions recovered almost immediately. This ability to control entire markets quietly, behind the scenes, gives the Fed immense influence over wealth and power in America. Its decisions determine stock market trends, bond yields, and even commodity prices. A single FOMC announcement can send billions of dollars shifting in seconds. Beyond domestic influence, the Fed also shapes the global economy. Because the U.S. dollar dominates international trade, the Fed's policies affect interest rates, inflation, and economic stability worldwide. Decisions made in Washington, D.C. can ripple to emerging markets, affecting currencies, imports, and exports thousands of miles away. Yet this power comes with controversy. The Fed operates with minimal transparency, and critics argue it prioritizes big banks over the average citizen. Its ability to inject liquidity or manipulate credit markets has saved some institutions while leaving others to fail. By acting as a hidden force in financial crises, the Fed demonstrates just how much authority it wields, and why understanding its operations is essential for anyone who wants to understand the real levers of economic power in America. Chapter 4: Controversies and Criticism. Despite its importance, the Fed is one of the most criticized institutions in the country. From economists to politicians, many question its secrecy, independence, and accountability. Some argue the Fed is too insulated from public oversight, allowing it to make decisions that benefit Wall Street more than Main Street. For example, during the 2008 crisis, banks received unprecedented bailouts, while homeowners lost their properties. Critics see this as evidence that the Fed protects the financial elite at the expense of ordinary Americans. Transparency is another major concern. While the Fed releases reports and holds press conferences, many of its key decisions occur behind closed doors. The complexity of its operations, combined with the technical jargon, creates a barrier that prevents average citizens from fully understanding its influence. This opacity fuels suspicion and conspiracy theories, though the power it holds is very real, not imagined. Some argue that the Fed's independence from Congress is both its strength and its flaw. While political pressure can be harmful in monetary policy, the lack of direct accountability allows the Fed to operate with near-total freedom. Critics also point to its role in cycles of boom and bust. Policies meant to stabilize the economy can unintentionally create asset bubbles, debt crises, or inflationary pressures. By manipulating interest rates and liquidity, the Fed may inadvertently favor short-term stability over long-term economic health. These criticisms highlight the tension at the heart of the institution. Its mandate is to manage the economy, yet the tools it uses are so powerful that missteps can affect millions of lives, raising questions about whether such concentrated power should exist in secrecy. Chapter 5. The Fed and Everyday Americans. Though most people rarely think about the Fed, its decisions impact almost every aspect of daily life. When interest rates rise, your mortgage payments increase. Car loans become more expensive. Credit cards carry higher fees. When rates drop, borrowing becomes cheaper, which can inflate housing prices and drive stock market growth, benefiting investors more than ordinary wage earners. Inflation, largely influenced by the Fed, can erode the purchasing power of a typical paycheck, affecting families' ability to buy groceries, gas, and essential goods. Employment is also tied to Fed policy. By controlling money supply and interest rates, the Fed can stimulate or slow economic growth, indirectly affecting hiring, wages, and job security. Its quantitative easing programs during recessions aim to keep businesses afloat, but the effects are uneven. Wall Street thrives, while small businesses often struggle. Even savings accounts are affected. Low interest rates may help borrowers, but savers earn less, sometimes barely enough to keep up with inflation. In short, the Fed's influence is hidden but pervasive. It shapes the cost of living, access to credit, and long-term financial security. Most Americans are unaware that the Fed's policies ripple into their lives constantly. Understanding these mechanisms is not just an economic curiosity. It is essential for anyone who wants to navigate personal finances, investments, or even the job market effectively. The Fed quietly governs the financial reality of millions, creating winners and losers with decisions made far from public scrutiny. Chapter 6. The Future of the Federal Reserve. Looking ahead, the Federal Reserve faces unprecedented challenges. Inflation, digital currencies, global economic instability, and political pressure all test its power and relevance. The rise of cryptocurrency and digital banking could reshape the financial landscape, forcing the Fed to adapt in ways that may increase transparency or, conversely, tighten control. Its global influence will likely grow as the US dollar remains the backbone of international trade, giving it the ability to impact economies far beyond America's borders. The Fed's future also raises questions about accountability. Should an institution with the power to affect millions of lives operate largely in secret? Should reforms limit its independence or enhance oversight? These are questions policymakers and citizens alike must grapple with. While the Fed has prevented financial collapse countless times, its decisions will continue to create winners and losers, benefiting some while challenging others. Its role in shaping inflation, employment, and economic stability ensures that it remains a force to be reckoned with. Ultimately, the Federal Reserve is not just a bank or government agency, it is a central pillar of modern economic life. Understanding its history, powers, and controversies is crucial to understanding how money, wealth, and influence operate in America. Whether you are an investor, the Federal Reserve may seem distant, hidden behind layers of financial jargon and government bureaucracy, but as we've seen, its influence is far from abstract. From its secretive origins in 1913 to its quiet control over interest rates, inflation, and financial crises, the Fed has shaped the lives of every American in ways most people don't even notice. It has the power to rescue banks while families lose homes, to stimulate the economy or slow it down, and to influence markets not just in the United States but across the entire globe. Its actions ripple through every paycheck, every mortgage, and every investment, quietly determining who thrives and who struggles. Understanding the Fed is not just about knowing how the economy works. It is about recognizing the invisible forces that control your financial reality. The institution that was created to stabilize the economy has become one of the most powerful entities in the world, operating in a space between government oversight and private control, with decisions that affect millions of lives. Its power is real, its influence unavoidable, and its secrecy deliberate. The choices it makes today, from interest rates to quantitative easing, from bailouts to digital currency policies, will shape the economic landscape for years to come. The question we are left with is this: how much control should one institution have over the financial lives of millions? And what can we, as individuals, do to understand and navigate a system that is so powerful yet so hidden? Knowledge is the first step toward empowerment. By learning about the Fed, its history, its powers, and its impact, you gain the ability to see beyond headlines and market fluctuations and understand the forces shaping your money and your future. The Federal Reserve is more than a bank. It is the invisible hand guiding America's economy, the secret power behind the nation's financial engine. And while most of its work happens in silence, the consequences are loud, felt in every corner of your life. Stay informed, stay vigilant, and remember, understanding the Fed is not just an insight into economics. It is insight into power itself.